Please welcome Melissa Falcone, Mortgage Advisor with Allied Home Mortgage Corporation. Melissa's first topic, FHA. It's not your father's FHA.
Hello, my name is Melissa Falcone, and I'm an Executive Mortgage Advisor for Allied Home Mortgage. Today's topic, FHA home loans. The Federal Housing Authority have created home loans available backed by the government. These home loans, many years ago, were feared by sellers. Buyers hesitated, realtors kind of cringed, and I'm here to tell you that things have changed. They're not as strict as they used to be. What people fear is when it came time for the appraisals, there would be so many repairs that would be needed. I'm here to correct you that the major points that an FHA lender is looking for, their point of doing some of the repairs is actually just for the health and safety of the buyers. What FHA is concerned with are lead-based paint. So if you have peeled lead-based paint that dates back to a certain period of time, they may ask for that to be scraped and repainted. And again, it's obviously for health concerns. The other factor would be if it becomes a health concern. If you have a big front window and there's a big hole in it, well, obviously that's a health concern. Someone could reach in there and cut themselves. If there's a second floor balcony and there's no railing on it, well, of course, yes, that's a health safety issue. They don't want their borrowers falling off the balcony. Or it's not as strict as it once was. As far as who's eligible, eligibility requirements are met if you are a U.S. citizen. Permanent and non-permanent residents, non-occupying co-borrowers are also eligible. The property must be your primary residence. This cannot be an investment property. This cannot be a second home. This must be a home in which you reside in. Some changes for 2009 for FHA, effective January 1st. There's a 3.5% down payment requirement. Also, the maximum loan limits have increased for FHA, and they're going to vary, and they're going to be based off of your local medium income. Your monthly payment has monthly mortgage insurance that is significantly less than your conventional loan program. This is a big factor. When you're looking at the big picture and you're including your taxes and insurance, your principal and interest, and your monthly mortgage insurance premium, you want to have that number as low as possible. They have also made the monthly mortgage insurance tax deductible. Beautiful. Conventional loan programs do not offer that. Only the FHA. FHA offers 6% seller's assist. Conventional offers 3% seller's assist. It's a big difference. I hope you enjoyed this. I hope this has found some importance to you, and thank you very much.
For Melissa's second topic, 100% financing is not dead. RDA loans. I'm sorry, we must interrupt your program for this special news flash. Sorry, we need to interrupt your program for this special news broadcast. A standoff at a bank in the state of New Jersey is over after police learned a person seen inside was actually a full-size cardboard figure. Officers went to the PNC Bank in Montgomery Township last night after the alarm went off. They saw what they thought was at least one person through the windows of the bank, which had its blinds drawn. The area was sealed off, and the nearby apartment buildings were evacuated as a precaution. Authorities used bullhorns and made telephone calls in a bid to make contact with whomever might be in the bank. After getting no response, a SWAT team entered the building and discovered the cardboard figure. It was not immediately clear what set off the bank alarm. Now, let's get back to our show. Please welcome our special guest, Melissa Falcone.
I'd like to discuss with you Rural Development Home Loans, otherwise known as Guaranteed Rural Housing Loans. These housing loans are absolutely terrific. You're talking no down payment, no minimum contribution from the borrower, cash contribution, No mortgage insurance, no monthly mortgage insurance. Again, huge. The no down payment. This is 100% financing loan. You can actually go up to 102% of the appraised value. So for example purposes, if you were purchasing a home for $100,000, it appraised for 102. You could actually finance 102%, take the $2,000 and apply it towards your closing costs. Again, you'll finance $102,000, but still, if you're low on closing cost cash, that's a simple way for you to get the job done. The no minimum cash contribution requirement of a borrower, beautiful. You can gift 100% of the closing costs. There is no limit on seller's assist. I mean, in a buyer's market right now, if sellers are willing to contribute to the closing costs, you're not capped at 6%. You're not capped at 3%. There's no cap. So that's absolutely wonderful. And the fact that you can gift this money from whether it's a seller or a family member, it leaves more money in your pocket. The no mortgage insurance is a large ticket item. On a conventional loan, that mortgage insurance can be quite expensive. This is the monthly mortgage insurance that's used as a risk if anything is if you're borrowing over 80% of the value of the home. With no mortgage insurance, your payment's going to be much less because you only have the principal and interest and taxes and insurance to pay for. So again, that's a very, very big factor in the money saving right there, just those three items. There's no first-time home buyer requirements. New and existing homes are okay. This is a fully amortized 30-year fixed interest rate. There's no prepayment penalty. You don't want a prepayment penalty if you plan to refinance anytime in the future or to sell because you're going to have to pay that penalty. Again, no seller's contribution limit. There's no limitation on the source of funds, and your funds do not have to be seasoned. There's no minimum credit score requirements. You can do what is called a streamlined refinance. The streamlined refinance, you have to have a 620 credit score or higher, but no appraisal, limited documentation, limited closing costs refinance. Absolutely would recommend this loan program to anyone. It's, again, full advantage. There are very few loans out there right now with a true 100% financing. Rural Development and VA are the only two right now. FHA is 3.5%. Conventionals typically are 3%. And that's for a certain credit score. You have to have a minimum of a 620 for conventional, a 600 for FHA. So with rural development being more flexible, it's really something to consider. I hope this piece was informative.